Hello everyone. In this video we would be learning about how to use the Fibonacci ratios for retracement in prices, in price reversals, and how to take the entries and exit. So I have selected my Fibonacci tool with the settings as shown in the fit here. So in this we need to find the most significant trough and the most significant peak. So that's how you draw a Fibonacci retracement. So the most, we are taking a Axis Bank 5 minutes chart for the demo here. So the most significant peak is this point and the most significant trough is this point. So I'm going to draw a ratio from here to here. So as we see, like all these lines has been projected, which are in a definite Fibonacci ratio numbers, which is 0, 23.6, 38.2, so on and so henceforth. So to make it more darker, I would be drawing lines, horizontal lines over these ratios. Now we would be going into some little explanation of actually what is happening in Fibonacci's. So if you notice that the prices from the significant peak to the significant trough at the various levels, these lines act as resistance and support. So if we see here at the 100% line, so this line acts as a resistance to the prices, and it's from here it's expected to either if it goes up or if it goes down from here. So this line is going to act as a resistance. So now to take entry and the exit here, so what we need to do is actually, let's say this action this 100% line comes before us as a form of a strong resistance, so which makes sure, okay, just this is not going to violate this line. So the trader takes the position here a little down from the line. So at 665 he shorts the position, and with the target of this next line which comes below it. So as you see, the prices come from here to here, and it again violates this line which acts as a support to all the prices that are cut from 665 to 652. So as soon as it breaches this support level, we short one more position here, so with the target of the 50% line. Now as we see here, this line acts quite as a strong support, and it also acts as a point for reversal. So the prices just reverses from here, so the traders can close the position here at the 50% line. Like this is somewhat what a little bit a story about what's actually happening with the Fibonacci levels. It's just the basic form of a support and resistance, which had been well sought from very specific Fibonacci ratio numbers. Now as you see, the prices move from 0% to the 23% level, and from here it might happen that the prices might move up from the 23% level towards upside or the downside. So what we are going to do is we are going to confirm this price action through the volume actions. So As we can see here, the volume peak, the buying peak happens at the 23% level, and at the next place, at the next price spot, the volume is in a sell volume. So a trader takes entry not at just 23% level, which is 638.65 actually. So he takes a position at 638 short and puts a small stop loss, or a stop loss at the next resistance here, which is 640.60. so he takes a short position with the target of 630, and in between there are like these various resistance or support, you can say. So he applies target for the resistance and then the final for the Fibonacci ratio. So as soon as the price comes down to this support level, it bounces back. So this price level acts as a strong support level for the future prices to come. So basically this video was about how to apply the Fibonacci ratios to the charts, and then do a basic buy sell analysis, which also includes putting a stop loss and the resistance support behavior of a chart. So Fibonacci is not only about placing, is not a signal, it's not an indicator, it does not give indication for buy and sell. It's a tool to take entry and exit in the positions. So hope you learned something from this video about the Fibonacci. More things will be cleared in the coming videos in this series.